Welcome to StockMarketPending.com. This is the 3X Bear TYP ETF Daily Tech Bear. One of the things that we're going to point out is that we go back to 726 and we look at what these trend lines mean, and we look at where the first of the breakout highs were, the second breakout, the third breakout highs, to that big long pullback where we had originally pulled back and we had those triple bottom price action support levels where the actual bear ETF Tech Bear 3X was being accumulated. It's that simple. Price action gap, double bottom, gap up. That meant that on those days that the markets and the futures were gapping down in pre-market, that's how you got the gaps, okay? So, and that's why you have this kind of volatility, but you can see clearly through these lines here where the price action was and where we once again gapped up yesterday to the high. We gapped up again today, put in the high, and have pulled back again right to a double bottom price action. So when we get back, when we start figuring out where the bulk of the last part of the trend has been, so let's just take this part of the trend. We can see clearly through here from those other lines. They go way back to 726, but we know where they came from and what they mean. These were the reversal tops in here, SMS Street Traders. This is where on the first reversal bar, selling and taking your profits and buying back down here. And this is the actual level 2 right here. It's the high of 48.84. They closed the previous day. They gapped from 47.48. They ran up to the high. Our entry here is 46.25. And yes, we took out $2.59 of risk on the entry. Scotty did there. And so that was a nice trade for him and a nice entry, so that if there's another gap tomorrow, well, we could gap up and he has a very nice healthy trade, and that's how it's done. Because once again, that's the intraday high and we're 46.25. That was in our mathematical direct system. That was about a teeny in our system. You wouldn't know what that was, but they do, and that's who the video is for. So basically what we want people to know that have been trading this name, it's a you know, when the Apples and the Googles and the technology is selling off, that's the time to be in the actual bear. So basically we got our entries down here. When I take a look at the last area of this breakout on 823, this is where the breakout started with the gaps. That's the nice thing about understanding these 60-minute trends, as you've been being taught using in our platform. The ascending 60-minute MACD bars is what provides the power of this ascending consolidation, the two. You can see here where we start to reverse, though, that's when we sell, and you can actually sell short. There's another fund that you can buy intraday, so when that one's pulling back, you can go long the ETF Daily Tech Bear 3X. So that meant when that put in the low, you did just the opposite here, SMS Street Traders. So the nice thing about this trade is that that made the high, that put in the low. When that reversed, that's when you're buying the bottom there. SMS Street Traders, as you've done and as you've been taught. So you had a $25 close. They take it down 70 pennies, 24.30 off the low, and guess what? Makes the intraday high 25.73 on the bull 3X. When the bear was pulling back, your bull was coming up. And trading them at the same time is the way to do it. Basically what I have here is I'm going to show a chart right now, and I'm going to type it in there, and that's going to be the THY. We'll wait for the chart to populate. Here is the THY chart. It's also 60-minute. It's just the opposite of the one that I've been showing you up here. That's the bear, and this is the bull behind it. And basically what I am going to show you is how the bear was working. Here is the bull 3X right here, okay? And the bull 3X, that's this right here. That's this level 2, okay? What we're talking about, SMS Street. Now, here is just those tops. And when that bull 3X went down, you can see here on that top trend line, we come down, you can see that that was that resistance there. It doesn't break its downtrend until it closes above 26, just from the longer look. When you come right off of where that top was being put in, when you gap below it, that was the end of the move. But here's the most important thing is that we had that double bottom price action, and we broke up on a gap, and we moved up toward those highs right there. Exactly. That's where we made the lows on 811. We came down in 812 and we consolidated 813. After the weekend, we got a little move up and we had the breakout there, and then we had a second little breakout there. So let's just zoom in on the important piece of the chart. And let's take this piece of the chart. Basically, you can see here on today's trading how we put in the bottom. Today is 825. Here's 825. When the trade reversed here, we were putting in double bottom price action here on the bull 3X. We gap up, we hold at price action the high of the 60-minute bar. That's bullish because we maintained a 60-minute price action above the 60-minute breakout bar. Then not only that, check it out. We got up to the 25.50. We put in that little high right there. So you can clearly see that ascending break above and consolidating that bar. You can see down here just the opposite is that this downtrend. Here, let me take out some of those trend lines. You already know what they mean. So basically, when you were putting in the, meaning that you could not close back above that high of that bar, watch. That's the opposite here. You gapped above and held the high of the bar. That's bullish. You got below the bar and stayed at resistance. That's bearish at a 3. So you had a, on this chart, you had a 180-minute top. Here, you had the consolidation of the price, and then you broke higher, then you broke down. So what I want people to understand is that as you're using the SMF Direct Access Trading Platform, that's your mathematical trading system that is provided to you, is that you're getting both moves intraday, because one's a bear, one's a bull, and throughout certain parts of the day, the bear works real well and he hibernates. Then the bull gets up and takes off running for a little while, and you want to get that side of the trade. So everyone did extremely well today, trading both, once again, the bear bull, which had the ascending breakout, the Tech Bear 3X. When it topped out and reversed, it was time to go long here and get short there. And that's what it's all about. Both are ETFs, both in the same sector, both intraday. Very nice, very nice.